Crypto Market Analytics, welcome back. Wednesday morning today, guys. Big announcement we have today. We're closing out all of our bullish positions, all of our bullish campaigns in the crypto space, guys. Not only closing out our bullish position on the Bitcoin, but pretty much everywhere. We're talking about the Ethereum, we're talking about the Ripple, the Neo, the Monero, all of them gone. All right. Now, guys, we think that it's better to be safe than sorry. That's pretty much the approach we're taking, right? And we have some evidence, new evidence, that we might be heading for a massive downside move. I mean, we already had some evidence for it. You probably remember one, which is very vividly, is striking in our memory. That's the Litecoin. And we're still having that same projection, that same bearish conviction coming from the technical picture. But now we got more, right? We got more, and it's much more significant, coming from the Bitcoin and coming from the Ethereum, also coming from the Ripple. Today we're going to focus on the Bitcoin, guys. I want to show you what had drove us to the decision to close out the position with the pound, with the Bitcoin, of course. So, guys, we talked about the fact that price had made a nice U-turn here just a couple of days ago. After touching slightly, I mean, you can barely consider that a touchdown, but let's just say it was touching on that 95.10, which is the 38.2 Fibonacci correction, and of the whole downside trend across 2018, right? And then we saw price breaking above 10,639. That is an important milestone. The fact that it closed above on the daily perspective a couple of days ago and yesterday was, a nice indication. However, when we went into the weekly chart, right, to reanalyze the technical situation, here's what we found, guys, and this is pretty significant stuff. Take a look. So we're still talking about that same mid-low key level here of that, on that setup, that cross price matrix setup, 10,639. That's the key level. Now you can see that last week ended up crossing below, right, having a weekly close below that key level. This week, which started on the upside, guys, now shows serious signs of capitulation, right? Giving up on the attempt to stick and to stay above that key level. It doesn't look like it's gonna happen. In fact, that key level is stronger than we thought. It's pushing so strong back on price action that what's left right now, it's only the evidence of that attempt to break through. Right, and that's a strong sign that price is probably not going to be able to break through. That's a strong resistance, and that means that price is probably going to have a serious downside move, guys. Right, that's the implications. So in terms of potential, we think it could go all the way to the 23.6, the first Fibonacci correction right here. Remember that level of 70.88. That's the potential on the downside. And you know what? That's just the tip, that's just the tip of the iceberg. Because if you take a look at the big picture, like we said earlier in previous videos on the Bitcoin, we're still by definition in an upside correction phase. So we might get back to the original bear market, back to the same downside trend after that, those 4 or 5 months of upside correction. So we have to be, like I said earlier, it's probably better to be safe than sorry. So at this point, guys, we're out. If price will come back, of course, above 10,639, base itself back above that level, have a weekly close, that's important, back above that level, then of course we will be interested in picking up the Bitcoin again. For now, we're out, and that's pretty much the bottom line. That's about that for the Bitcoin, guys. We'll see you in the next video. Take care.